Welcome everybody to another Deus Ex DAO Traders Roundtable. This is the June edition already, and I think we skipped last quarter for the Traders Roundtable, but we're back. A lot has happened actually in the markets. We had a nice Bitcoin rally. We had the USDC back, which already feels quite far away now, but we'll be looking at liquidity in banking and in traditional markets later in this roundtable. And today I have with me Liscivia and Syra. Syra, you already know, of course, because he has been a long time participant in the Traders Roundtable. But we also have a new DAO member called Liscivia, who has quite some experience watching the traditional markets and especially the liquidity conditions. So, welcome you both. Welcome Syra and welcome Liscivia.
Thank you, guys.
Hey guys.
I'm quite excited, to be here.
I think normally we would start with the Bitcoin chart and the Ethereum chart, and then look at traditional markets. But since Liscivia is our new guest and actually has a really nice platform called Liquidity Wiz, and has a lot of charts on traditional finance, around liquidity of the US markets, but I think there are also some liquidity charts from other countries in there. So let's kick it off with Liscivia's view on whether you want to be a bull or a bear in the macro conditions, and whether macro conditions are getting better after all those banks fell over, or that we still have to sit tight. So Liscivia, take it away. Feel free to start and give your opinion and show your charts.
Oh, so thank you very much, Ape. At this point, it feels like it's quite a contrarian position to be bearish and still cautious about markets. But I have to say that since obviously looking at the S&P 500 since October of last year, basically the chart has recovered like quite significantly. This obviously has paired with an improvement in the liquidity condition, especially in the United States. But as for the time being, there's this dynamic that has been talked about like quite often in Twitter these days, about the Treasury General account of the United States and how it needs to recapitalize at this point because the debt ceiling has been raised and they're allowed to issue new securities to replenish itself. I mean, that's absolutely necessary, as you can tell from this chart. This is the net liquidity chart, and the Treasury of the United States is reported in purple. And you can see that it's basically non-existent at this point. And obviously, the US government needs some money to fund spending in any sort of way, mostly to fulfill the interest on their debt securities. But like, how does this chart mean anything in our context? I'd say that if you look back up until roughly 2 years ago, there's quite the correlation between the status of this resulting net liquidity, which is basically derived by subtracting the repo market, which is this part here in yellow, and the Treasury General account of the United States from the total amount of assets basically held by the Federal Reserve. I guess a lot of people have already stumbled in this chart at this point, and there's even two variations, like with and without the assets from the venture funding program. That, as you can see here, like they make a significant difference. But yeah, the main point would be that since the S&P has been fairly correlated recently, that obviously considering the correlation that is there at the present time with between the S&P and Bitcoin itself, I feel like these topics are quite interesting for also for the crypto community. So the whole point here is trying to understand how the liquidity status of the markets will impact assets, risk, crypto in general. And I think that conceptually one could say that, well, from the macro perspective, I guess, once you understand how money creation works and how the debt economy works in some sense, like basically the concept can be boiled down to if more money enters in the global economy, like assets tend to reprice to the upside and vice versa. That's the like the TLDR. So coming to what I wanted to show you today is that it's some news about this whole situation. And yeah, one of the topics that is prevalent right now on Twitter is that this issuance, this new issuance of securities from the Treasury General account could be withdrawing liquidity from the markets, because once the Treasury prints new securities, somebody has to buy those and absorb that duration risk. In this case, like depending on which type of security is issued from the Treasury, you probably have like different outcomes. And in this sense, I recently made this post highlighting the fact that there's these T-back tables provided by the Treasury itself that I can open up here and show you. And I obviously take this with a grain of salt, because these are basically projections and they can change. But they show you, like for instance, this is Q2. They show you the total amount of bills they think they will issue and the total amount of different types of bonds and notes. This was the Q2, and there's also the Q3, which maybe is more relevant, and I could have showed you. But yeah, basically the numbers are here, and this is the total of new money. So fact is that if you sum up what the Treasury has, like what they're showing you in the tables with what QT is gonna be going forward, you still pretty much end up with an estimate of roughly 500 billions of liquidity withdrawals from U.S. markets in the next quarter. And this is because actually the liquidity withdrawal happens when the securities issued are long-term securities, like bonds or notes, like 10-year bonds, 5-year notes, and such. Actually, I got like another chart that shows you how recently, treasury bills issuance has picked up since that ceiling has been raised, and this is the other alternative, meaning that if the treasury starts to issue more bills, which is probably going to be the case, since they also underlined it into these tables here. The fact is that could be, if anything, neutral to the liquidity status, because as I just introduced, the repo market in yellow has to be subtracted from this equation, and this means that these securities, they're purchased with the funds held inside the repo market. The effect is basically neutral on the green side of this chart, so to speak. And this is because there's an actual economic incentive from money market funds, which are one of the main participants parking their money in the repo market. Once the 1 year yield of the 1 month the 1 month treasury bill yield, as long as it's above basically the repo rate, it's just more convenient to buy bills. And so if the repo shrinks, if the treasury prints T-bills, that's not gonna subtract any meaningful liquidity from US markets. But instead, if they print long-dated securities, that's gonna have a more significant effect on liquidity. And well, at the end of the day, that's not the only factor that we should keep in consideration. There's QT that is still gonna probably withdraw roughly, I don't know, $90 billion a month or something like that. So in the next quarter, like I said, the numbers, I think, could sum up to this kind of amount. Also, from the bank term funding program perspective and the banking crisis that there was going on in the United States, I think that the numbers are showing that the situation is slightly cooling a little bit, certainly with a discount window and BTFP volumes going down. And at the same time, the other credit extensions is basically the money that the FDIC used to bail out the failing banks. This is also slightly trending down. So it seems like from this perspective, there's some room to breathe for the Fed and keep up this tightening conditions. So this is pretty much the US in a nutshell. And just to provide a more complete overview of what's happening around the globe with liquidity, I also look at the flows from the Chinese repo, which are flat at this point. So there's nothing positive going on here. While looking at liquidity from a monetary perspective or an M2 angle, so to speak, we can see that is significantly dropping in the last since October. We had a pretty significant run, and the markets followed. They just moved in tandem with this trend in M2 liquidity. But recently, this trend has begun to dwindle a little bit, and I feel like Bitcoin, if anything, is like more is more correlated with this lately than the S&P, which is completely booming at this point and hitting this the 0.618 level on the Fib retracement. So I guess this is relevant because on a rate of change basis, I also usually look at this, and both from a 3-month cycle perspective, on a 6-month cycle perspective, and on a 1-year cycle perspective, the change in global liquidity is pointing down, like in a meaningful way. And if we plot, like, these are the Bitcoin, gold, and the S&P 500 on a 6-month rate of change basis, plotted against this stuff, they kind of keep this. I wouldn't say that they're like perfectly correlated, but it's just like I mentioned at the beginning of this talk. There's just a fundamental relation between more money in markets and less money available, even for the sake of speculation. And ultimately, one of the last things is that talking about what central banks do with their balance sheet in terms of liquidity quantity, this may not be the most significant data point, but in terms of quality of this liquidity, like, this is even more significant than monetary liquidity, because central banks essentially lead the pack. And yeah, basically there's the same trend. It's pointing down on a 1-month, 3-month, and 6-month rate of change basis. Here I got it with divided by the different countries and the different central banks, being it the PBOC, the ECB, the Fed, etc., the Bank of Japan. And the last thing that I wanted to add to this discussion is that there's also like a significant event in Europe, which is going to withdraw like roughly 600 billion euros, which is the maturing of these TLTROs, which are basically like the ECB just lent some money to the European banking sector, and they will have to repay it like soon, during this summer. So this is the perspective that I have for the short term. And I know that being bearish at this stage feels a little bit contrarian. I have to say that I'm feeling like quite comfortable in this spot, because you know how markets operate. But that's only for the short term. While in the long run, I believe that at least in my opinion, it makes sense to be bullish from 2024 and going forward, because of these treasury buybacks, which are basically going to be like a means for the U.S. government to stabilize U.S. treasury markets, which are probably gonna feel some of the heat going forward with this banking crisis, which is probably not going to, even though maybe it's cooling right now, it's not probably ended, I'd say. So we could consider these as a stealth form of a yield curve control, just like the one that we have on Japan. It's going to be different, but on a conceptual level, like I think it could be like similar. And yeah, basically, as everyone I think grasps at this point, monetary inflation may be on the plate. My opinion is that this happens later than sooner, and it's probably too soon to call for a bull market with like a recession probably going to happen like probably very very soon. So this is me.
Well,
And
I have a question here. Like I love those charts, especially the cycle chart you have in Liquidity Wiz is a brilliant chart. Where we saw like the cycles, whether it's a little bit lag in there. I think that's what it shows actually quite well. It shows the lag of the markets in regards to the liquidity cycles. But maybe the easiest one is the one where you have the SPX and the money supply and Bitcoin. This one.
yeah,
Um,
that's
so this one looks a little bit odd to me in the respect that like global money supply is going down. Bitcoin is slowly dipping a little bit, but it's more correlated in a way. And actually supply. But the odd one out here is I think the SP 500 because well, it is actually still going up while the money supply is going down. And the question is like why is that? Like, are we very close to a turning point? Is there some other reasons for a dislocation? And will money supply eventually follow? Um,
yeah.
like what's your opinion on that?
Yeah, the fact is that really two things come to mind. Is that the first is that no, actually, as I told, like from a macro perspective or macro principles standpoint, I like to think about markets like um, trying to following the liquidity trend throughout the years and decades and to reprice accordingly to the supply of money, which at the end of the day is like a unit of measurement for value. And you could like perceive like value in different ways, but um, if basically the supply of the meter that you use to measure that changes, you have to reprice the numbers have to change like accordingly. So that's one thing. But on the other side, like on the market microstructure perspective, like there's no free lunch, as they say. And each time that you expect like a move and it's going to come too obviously, like you're probably going to need to lean in the opposite direction just to grab some liquidity, just to pull some um, you know to grab to catch some people out guard. I think that could be one of the things. But obviously, the second thing that I would like to mention is that, and I think I already did, is that obviously there's some correlation. Certainly, if you're an investor and not strictly a trader, like you could take this with some more ease and peace of mind. But like it's not like this stuff is 100% correlated and it's going to be like until the end of the day. There can be some divergences, and I think there should be some divergences, because ultimately boiling down, I think this is a very significant data point to follow in the world of today, because how the debt economy works, and the fact that the most indebted economies in the world and the strongest economies in the world like rely heavily on issuing new debt to pay that proceeds from their outstanding debt securities. That like basically implies that inflation is needed in this design of the debt economy. So that's how we move forward. But at the same time, like markets can diverge from that, and it depends on if you look at the at markets with a short-term lens, or if you look at markets like more like an investor. So I think liquidity matters. It's not the end all be all. So there's definitely a lot more to consider, both with macro and markets microstructure. And so it's natural that markets diverge. But at the same time, I wouldn't discount this data point as irrelevant, because I think that given enough time, I think markets catch up with the liquidity status.
That's a good point about like sourcing liquidity, or the market like pushing further until players really step in when it's like over or underpriced. And if this dislocation is really true, I think we might be close to some kind of pivot too. But I'm wondering what Syra thinks of this, because he is always monitoring the S&P 500 too in his trading, especially also with correlations with Bitcoin. So could you tell us a little bit about what you see in your charts, Syra?
Yeah. 1 second. So talking about pulling liquidity, and you guys know that I like these swing failure patterns, which is price sort of dips up above, a pivot.
1 second, we can't see your chart yet.
Oh, what? 1 second. Can you guys see it now?
Let's see. It's still in the StreamYard section.
No, nothing here.
No, no trading view.
Shit.
Having some technical difficulties here.
One second. Okay, what about now?
Yes, we see it.
Yeah, sorry about that. So, what I've been waiting for the S&P 500, and you guys know this because I posted it on the Discord months ago, right? Is that we dip up above this pivot high, right? And then we take the liquidity there, because a lot of people who went short there are likely going to get stopped out, and then a continued move down, right? That's sort of what I'd like to see. And some added confluence there is if you take a fib pull, you have the 618 and the 66. And so you have the liquidity just inside the golden pocket, which is added confluence, and that is actually what happened here, minus the swing failure pattern. Where was it? I think it was here, right? So that brought the S&P 500 down right after hitting the golden pocket. This is what I would like to see here as well. And what could stop us from doing this is if you take a volume pull from the all-time high all the way to now, you have the point of control and the value area high just under it. So what could essentially happen, right, is that we sort of do this, find support, and then continue up. Because to me, if this doesn't bring us back down to this channel, right? So if we don't get this move, then I'm going to be bullish, like very bullish. I think that there's, the chances of us going back to all-time high increases, right? If this doesn't happen. Of course, there's also this pivot high. There are some, high time frame levels that I'm looking at as well. But this would be your best bet for rejection, which is like coming towards now. That's what I see, and sort of it times well with a rejection here very soon to where the Nasdaq is. So I'm following, I'm following this harmonic, which is it's a bullish Gartley, which essentially we've gotten up to the C point of where a perfect Gartley pattern would be, right? So B point is in the golden pocket, 618. Your C point is around the 618 and 66, followed by a larger drop and then a big move up. And the Nasdaq is where this is right now, which would be nice. Of course, this can go up here, maybe take this liquidity and then down. But just in terms of timing, where the S&P 500 is, where the Nasdaq is, this would be perfect for me.
And so I think that volume node that you've shown on the SP 500 is one to watch. Like if we see that swing failure around that fib level, 0.618 or 0.66, it rejects and gets like some bid at that level. That's a good sign for maybe some bullish continuation. But I think if it crashes through, like if it just moves through that, like I think that will be quite significant, because like it's an important volume level. It's been building in this range, but if there is no support there, then I think this would go much lower. And your other chart shows that some of these patterns would lead to filling basically the whole rally up back to, I think, the pre-corona top in the market. So I think that would be an interesting thing to see, because that would basically erase all the market gains before the money printer went on. But I think what we saw from Liz, his charts is that, of course, the global money supply has been growing, actually. So I'm not sure if we get to that point, but I think we are at a potential pivot here. So I agree with your assessments of both of you that this might be a pivot point, and it's important. And I think if we take a look at Bitcoin in a few moments, like sometimes the lower liquidity coins or assets basically can show what actually is happening in the broader market. Sometimes they work as the canary in the coal mine. So maybe Bitcoin pivoting first might be that signal where we see this asset basically showing the way. But it hasn't really broken down yet. Like we're still ranging. Bitcoin had some volatile moves up and down, but we'll take a look at those charts later. But maybe Syra has some other charts to show us. I think he has the US tech chart up.
Well, yeah, no. So I actually wanted to ask Liscivia. So you said just to sort of I don't know if I understood it correct. The money supply is increasing, but you said money is moving out. You were talking about liquidity and liquidity leaving.
Basically,
go over that again.
yeah. So if you look at the like on a monthly basis, like from October, the markets have rallied significantly, while and they've been pretty correlated with the movement in liquidity from the lows. Like both U.S. liquidity has improved, and also global liquidity has improved significantly from the lows of October. So in this sense, like the bounce was completely justified. But at this point, like even though from a U.S. standpoint, we don't see like the need to necessarily like be too concerned about the present moment, unless we factor in those like 500 billions of potential withdrawal in the next quarter. Like we see a significant drawdown in the short term in what is monetary liquidity, and also on set with the same trend is true regarding central banks liquidity. So there's also, I think that from a technical perspective, like your analysis makes a lot of sense, and we're about to hit like a very pivotal point. Unfortunately, because of the nature of how markets work, like the move cannot be too obvious, and that's one thing. But on the other hand, like for instance, I started shorting the crypto markets since like probably, I don't know, maybe a bunch of weeks ago, because we were getting closer to the pivot of the Federal Reserve. I think that markets tend to front run these events, and so I generally ask myself, like, well, what are we left with once the Federal Reserve pivots? Like I don't see any significant bullish catalyst going forward, but I could be wrong. Obviously, no one can predict the future. One other thing that I used to tell me is that I used to tell myself is that historically the beginning of a recession hasn't really been bullish, like, ever. It would make sense technically to be bullish once we break through the significant point and moving forward, but that would mean like necessarily seeing like liquidity basically following. If I said that the issuance of T-bills is not necessarily going to be bearish for the liquidity status of the US, but it's not even going to be bullish. So that's one thing. And also with the banking crisis, the markets has cheered when banks have failed. and they basically interpreted this jump in the assets of the Federal Reserve's balance sheet um, like stimulative. But I think that this is probably one of the most important factors, and yeah, the counter argument would be that um, just because with the pandemic we've issued there's been like the production of such a significant amount of liquidity since here basically in 2021, this little contraction doesn't mean much. But yeah, I think that's up to interpretation to a certain degree. But
Yeah.
one other thing is that this is impacted by the banking sector, the banking sector's lending standards. So if the banking sectors feels the heat, they're not going to lend money into the economy, and this is going to shrink. So
So I was thinking, could it just be that people are so used to us just moving up that they're almost ignoring, they're ignoring, I guess, the bank crisis, these kinds of things, and just continuously buying, which I guess longer term is not good, right? Longer term, that's likely not going to lead us up to new all-time highs. If it does, it could even mean that we're to see a larger crash. And if these sort of drops don't happen, then then what's to say that we don't just keep going up?
yeah,
And it's like, but why? Like, what is, like you said, what's the bullish catalyst here?
yeah, I completely understand it. The fact is that we've been spoiled by markets and the permissive environment with lending in the real economy, and zero rate interest policies for like decades now. So that's one thing that has most probably like influenced animal spirits, and has probably engraved this way of thinking.
Yeah. And it's only been, less than 2 years. So this downtrend lasted about a year, right? Less than a year. If it's the case that, a correction, let's call it from here, right? From the COVID. So again, yeah, it's so if the rally from COVID lasted up 2 years and the correction was half of that, I think generally it's usually 1-to-1. So you would see something like this. So this is a Fibonacci time pole taken from COVID low to all-time high. You would want to see a correction to be 1-to-1 of the rally, and the 1-to-1 falls falls here in October. But we didn't even get there, and usually these in terms of timing, it's usually more than 1-to-1. So that's why I'm like very skeptical, and if I'm wrong, then that means like you can throw all this stuff out the window and just be like, well, we're just going to ignore past data, and we're in a completely different sort of market dynamic now. So until we start seeing something like this, then I'm gonna have to change my thesis. But for now, this is where we are, and then it's wait and see game, right?
Yeah, I think I agree with that. I completely agree with that. I think that like being excessively bearish, when the dynamics of like I said, that economy itself, like, are probably going to be bullish in the next going forward in 2024 or 2025, I guess. I think that, yeah, it just I think I lost my point because I was reading comments on the private chat. Where was I? Where was I at? Like, yeah. By the way, I think it makes sense to wait and see right now, and not get like overly exposed one way or the other, because going forward in 2024, 2025, like, probably there's going to be like some monetary inflation. Obviously, if people like cheer too hard and too soon, I don't think that's going to end well necessarily. But you know, historically, like, betting against the central banks and the Federal Reserve specifically has never been like the greatest idea ever. In this case, like, liquidity had to rebound, markets had to rebound because the hiking cycle has been so aggressive, like it's been historical, and yeah, like probably the banking sector, like, basically blowing up in the US, it's a sign that that has been overdone. But like, I think that the intervention with the BTFP program, even though it may not, and in fact, I don't think that it's going to be like a complete resolution of this problem that is going to be like, is going to become probably even more even worse with basically money markets running to buy that issuance, and potentially like withdrawing even more money from the banking sector if there's some long dated securities that is going to hit the markets, like it's probably going to be the case. That's like you know, I think that it's yeah, that's pretty much much it.
Okay, yeah, good points on this divergence basically with markets and money supply. And I think we could talk for hours about like this liquidity and traditional markets, especially also on the topic of rate hikes, whether they will come or not, how much we will see, what percentage do they will hike basically. But maybe we'll have to save that for another moment, because I think we've promised viewers also to take a look at Bitcoin. I'm not sure if Liscivia will share his views, but I know like I and Syra have our views on this. So maybe I'll kick it off and show you what I'm seeing currently on Bitcoin, and I'll start with some metrics from Deribit, and basically the most important metric is this volatility index. Here in white, you can see the index price, which is basically the Bitcoin price, and then in green you can see the volatility index, and basically it measures the volatility on Bitcoin, which is super important for options traders, because that prices the options for them, but also because options traders in general are volatility traders. And like over time, if we take the whole period of this index, we basically see that in general volatility on Bitcoin has been dropping, and that's often happening in an asset that's getting more mature. More people are trading it, so volatility dies down a little bit because the market gets a bit more traded. So, but that doesn't mean that it isn't a good measure, and we shouldn't look at it, especially not on the fluctuations. So, what you often see is that crypto markets move quite erratic from time to time. I think last November we saw a big drop in the markets, and then you also see the volatility index spike up. And then it starts sloping down, and then you see again that over here you can see a move on Bitcoin and the volatility index spike, Bitcoin going sideways basically, and volatility dies down a little bit. Another move, and then we see volatility die down. And this is actually quite relevant, because if we look at a longer period, we see that the Bitcoin volatility is actually at one of the lowest levels we've seen so far, if we measure from April 21. But often it means that after a period of very low volatility, we see some expansion to either the upside or downside. We don't know yet, but often periods of low volatility are followed up by a period of higher volatility. So that's basically what I'm expecting here. And it's not odd, like there is some seasonality in the crypto market too. We've seen it in the past that during like summer months, trading activity dies down, but also volatility. So it makes sense that we see that, after May, and might continue during June. But I think as we ramp up towards July or even August and September, we'll see some more volatility. And I think like the option traders would express this as buying some Vega. It's like long-term volatility buying, and maybe selling some stuff in the front, like closer by, capture that premium, and make sure they can buy some options that are further away in time, to express those views that volatility eventually pick up, and they'll profit from that. So with that in mind, I think it's good to take a look at the charts and basically see what Bitcoin has done. We saw that money supply chart that showed us that like the Bitcoin rally was nicely in line with the growth of money supply. From a more technical perspective, we see that Bitcoin basically retested this level here, somewhere between 28,000 and 30K, which was also like quite a historic level in terms of the previous drop during the bull market, which also hit the zone between around like 30K. So it has been a support in the previous market cycle, basically, and it was an important breakdown level. So we saw it retest that. It was slightly losing that momentum, and now we slowly see it turning over, going into that low volatility period. I personally use a fan of moving averages. Like I'm a fan of the MA fan, of course, but it feels a little bit that we might be at a turning point here. Um, uh, Bitcoin has broken down like this 100 moving average, which is on the daily chart here, which was quite significant in the past, where it like touched it in the downtrend, but never really has had any success getting above it. And then in this uptrend, it respected it here and made a move higher. So it shows a little bit to me that this might be an important level. And right now it's slowly getting below that. Of course, we had some of the Binance news that they're getting sued by the SEC in America. Like, my opinion on that is that the SEC will come after everybody in the crypto space just to prove their own importance, just to keep themselves in existence and get like funding. But it is a significant event, and it led to this drop. And then, we saw yesterday that basically the whole move was reversed, which is interesting. So it's basically, back in this range. We see it now rejecting like a 55 EMA. It's still a little bit below at 100. So I think that the coming week or the coming 2 weeks will be important, unless it will keep going sideways. That volatility will keep dying down until later this summer, which might be good, because then we can enjoy our summer instead of staying hooked to the screens. And last thing I want to show you here regarding this move. Yeah. Is there anything you want to comment on that?
Yeah, just that I wanted to enjoy my summer, honestly.
Yeah. We'll be in ETH Paris for those listening and building in the space to talk to all these founders. So hit us up if you're in ETH Paris. I think next month. A little bit more than a month. And hopefully we can enjoy a quiet ETH Paris and talk to a lot of interesting people in the space. But for now, like we saw that drop in the Binance on Binance, and Binance news dropping, and then basically reverting this move. And you could see that actually quite well. What happened here, and the open interest actually was high on that drop. And let me grab this. Yeah, sure. So the open interest was actually high. You can see that here, and over here you can see it too, on this move down. And let me remove this. I think this chart is needs some reloading here. But what actually happened was that the price went down, but open interest did not. So it did not actually remove a lot of people from the market. It was actually just new longs, new shorts battling it out. And not have to imagine is that there's still not one side really being offside, and especially around these big volatility events like such news dropping, you should expect that, like, that somebody was really offside. And so
Hey, you're really
that's
choppy.
basically what you can see with that open interest. And that's odd. You can still hear me now, right? Like,
Yeah, I can hear you.
Yeah, we can hear you.
okay, great. Yeah, I think this chart might be problematic. But anyway, like we saw this drop happening. We saw open interest take a little dip in here, but it actually was actually super high. And then we see this reversal happening. We see that open interest suddenly drop a lot. And that's also what you can see, that first here we see a lot of long liquidations, but basically directly it got filled because other longs stepped in again and other shorts stepped in. And then suddenly these shorts were offside because of some buying pressure here. which is now resolved. So I feel like the market is now really waiting for an important move to happen, and I still guess that we'll have to see which side is going to over leverage or not. But for now, like spot has still been selling into this, and the market seems to be holding up just because of the futures. So that doesn't feel super stable, and I think unless a level, then I would be leaning a little bit more bearish here. But I'm wondering what Syra is seeing in his charts, and what his expectations for Bitcoin are. Shall I pull up your chart, Syra?
Sorry, I was on mute. My bad.
Okay, let's kick it off then.
Yeah. So I guess just to recap, price action, we were in this range, and we front ran. I think this is a level that like many traders and stuff were looking at, right around here, and we I guess slightly front ran this high, but we generally got there. And to me, like this looks like a healthy correction. And like, I would like to see, hold on, let me just do this. So we found ourselves in this sort of downward sloping channel, and we're still there. I would like to see something, maybe like this, where we sort of dip into the previous range and then up. That's what I want to see. But for now, we're still in this range, sort of making this corrective move until we either break up or we see ourselves get acceptance back inside this previous range. And I guess this is where that sort of consolidation before large volatility starts kicking in, right? But for now, this is where we are. And this is still bullish. Bitcoin is still bullish. I would like to see it take out this high before, for either a larger pullback down, or we see sort of like a bounce and then higher, which is kind of contradictory to where the ES is. And you know how Bitcoin has not really been correlated to the S&P 500 as it was like a few months ago. A few months ago, it was, I can tell you where Bitcoin is going by watching what the S&P 500 does. But now it's that correlation has, for the time being, faded away. So it would be interesting to see something like the S&P 500 get a pullback and continue dropping while Bitcoin starts going up, which is kind of hard to imagine that being the case. But just looking at it, if Bitcoin is still bullish and ES is has been bullish, if nothing happens to the ES, then Bitcoin can really continue this move up. Where we are, at least in the higher time frame, is, so if we take the volume, let's take the volume for everything. So the value area low of this range here, of everything since 2021. If we get acceptance back inside this range, sort of do this. So we swing failure pattern 32.5, and then we sort of get support again, maybe here. Like, this could happen. This could really, really happen. What other sort of confluences am I looking at that sort of show us where it could potentially go? Is let's see where this falls. Okay, so yeah, this 48K region would be nice. You know, we sort of take out this high, and this is just the bullish case, right? I'm not saying it's going to happen, but let's see what happens if I switch it to log scale. Okay, even if we get to 3840, like that would be really nice, and it would sort of complete this sort of move in terms of, I guess, I'm no Elliott wave specialist, but I have been trying to learn Elliott waves, and it would sort of complete this. Let's just roughly saying, you know, I guess it's 1, 2, 4, 5, you know, followed by a, or maybe followed by this move. That would be nice. That would be nice to see. And if we're really looking towards, you know, a larger pullback towards maybe the end of this year or next year, let's say next year, then that leaves us room to really, you know, go higher and then down. But at the end of the day, like I don't know where we're going. I thought that we would be lower at this time, but we're not, and we're higher. And so I'd have to sort of base my bias on what the charts are saying. And for right now, as long as we're, you know, under 30K, you know, you can't say 40, 50K yet. So again, it's a wait and see. What I am confident about is if we do get acceptance back inside this range, if we do get acceptance back inside here, oh, that's not it. Yeah, if we do get acceptance back below 25K and we start holding daily candles and we start grinding lower, then that's, you know, we're likely going to be seeing 22-ish, 20K. And if that doesn't hold, then it's back down to 16. That is what would happen if we start grinding lower, you know, under 24.8. And I say 24.8, for me, 24.8 is an important level of liquidity, because if you pull up a volume profile and then you go on the weekly, you'll see that there's a point of control. This is a naked point of control from the week of March 12th. And this week had much higher volume than prior weeks, right? It was a 9.5 billion week, at least on the Bybit exchange. And the point of control there that's untapped, so a naked point of control falls at 24,850. So it would sort of make sense to me, for Bitcoin to sort of stay inside this channel for the time being. And if I mark out 24.8, it would sort of look like maybe we do something like this and then out. Like that would be a fake out of us entering that previous range, from 25. It would be a dip inside and then a bounce. Like that would be nice to see. And then I would be even more bullish. If this scenario happens, I would be even more bullish. And just to bring back the ES, like maybe we do get a swing failure pattern of that 43,000 and then drop and then find support at that point of control and then a bounce, then that would kind of make sense for this to play out. And as we know, Bitcoin can move up a lot very fast, right? So, that was a 31% move in 5 days. In 5 days, that was 31% in 5 days. So Bitcoin can literally, go up to this 38K and or higher in a very, very short amount of time. The ES doesn't move that fast, but like this is a scenario that I'm really keen on seeing. Is this super move up to the 3840 region, and then a larger pullback together with all other markets, unless we start dropping down below 24.8, and that's my sort of line in the sand. And you can say that the biggest line of the sand is this guy, right? This low pivot here. If price breaks it down, if we go under here, then for sure I'm looking under these lows. Like we're probably going to at least revisit that 16K area. But if we're already that low, like what's to stop it from filling in this empty space here, right? Down to 11K or under. If we go to another exchange, sorry, because this is Bybit, something that has more data, right? So there is this whole space and the volume, I guess, in here that still has yet to be tapped down here in the 10K, 9K area. If we do that, and then like this would be a nice accumulation again, and then new all-time highs. But of course, that takes a lot of time. And we don't know if it'll get there, if it'll ever go back there. But that's what I would like to see.
Interesting. It makes a lot of sense, honestly. And people should always keep in mind like the bullish case and the bearish case. I guess from a fundamental side of things, I guess one good advice would be keep an eye on the issuance of the U.S. Treasuries in terms of securities, like long dated versus short dated, to see what the effects are on the status of U.S. liquidity, and also keep an eye on the news to see how the banking crisis develops in the U.S. and also if it eventually spreads some contagion in Europe, for instance. And also keep an eye on global liquidity conditions in terms of both the monetary liquidity and the liquidity of the most important central banks in the world. I guess that's very complementary to analyzing markets to determine how to set up your long-term strategy as an investor or as a trader.
Yep.
Those are really good end notes. I like that. I like that. I think we have to stop the stream, but it was really informative with both like a fundamental view of the macro, some technical analysis on the S&P 500, and also Bitcoin. So I hope like the viewers that view this stream live or will watch it back, learn a little bit new with all these metrics. But yes, as always, consider both cases. Have your risk management in place, and don't go all in. But I think these are interesting moments to keep watching the markets. We're surely at some pivot points, whether it's full bull or we still have to wait a little bit longer for that, and the time to accumulate will be there. Thank you, Liscivia and Syra, for joining me on this live stream. Really informative. Some nice effects here from Syra.
No, thank you, man. Thank you for having us. This was cool. It's been a while, but this was fun. It's always fun.
Yeah, it's been like a real pleasure, guys. So I'm looking forward to the next occasion.
Thanks. Okay, this was another Deus Ex DAO Traders Roundtable. You can watch it back on YouTube if you missed something, and we'll send the links over on Twitter. So thank you for watching.